We're rolling. Welcome to the REI Rookies Podcast, the Real Estate Investing Rookies Podcast, episode number 103, where we invite you to follow us on our journey towards financial freedom using the power of real estate. I'm Josh Koth, and Jack Haas is off shivering in a corner somewhere. Here at REI Rookies, we believe in a couple key principles. Number one, the best way to retain information is by teaching it to others. And number two, a rising tide lifts all boats. We're not competitors, we're a community. So let's get into some real estate investing. All right, guys, today we have Mat Sorensen, who's a lawyer and owns Directed IRA and Directed Trust Company, they produce self-directed IRAs that allow you to purchase real estate. Pretty cool stuff I didn't know existed till a little while ago. And the vast majority of money is sitting in retirement accounts. And this is a way people can just surge past what they're getting for returns in the stock market and other traditional investments and actually purchase investment properties inside their IRAs. So let's listen to the interview with Mat and figure out how to do it. All right, everybody, we're here with Mat Sorensen from Self-Directed, and actually the name of your company is Directed IRA and Directed Trust Company. Is that right, Mat?
That is right. Yeah. Thanks for getting it right. It's directedira.com. So you can check us out there.
Perfect. And Matt's written a book called the Self-Directed IRA Handbook. I just ordered my copy, and I think we're going to give one away to a listener too. So make sure you shoot us an email asking for the book, and first one that sends us an email at info@reirookies.com. You get a copy of the Self-Directed IRA Handbook on its way to you. And Mat, I wanted to ask you a little bit about, I really want to get into discussion about self-directed IRAs and using them to purchase real estate. But maybe just tell us a little bit about your journey into this realm and your experience in real estate investing yourself.
Yeah, I think a lot of people, when they hear this, they're like, well, I didn't know an IRA or a 401k, you're telling me that can own real estate? And I mean, that's what we're talking about here and what we're going to get into. It was, 2006 is when I kind of stumbled into this. I had been an attorney for a couple of years. I did a lot of tax work. I had a client that was a real estate developer, investor, very successful, and he wanted to use a Roth IRA to get an option on a piece of property that he was hoping to sell for a large gain. Mm-hmm. And my partner, who was an attorney and CPA, still my partner today, was like working in it a little bit, and we kind of knew enough to be dangerous, but it was like, all right, how are we going to pull this off? So here's what the client did. There was this property. It was just agricultural property that went by the highway, and it was worth maybe a couple $100,000. He went to the landowner and said, hey, I'm willing to buy this property from you for $400,000 within the next 5 years, and I want an option to buy it from you. And I'm going to give you 10 grand right now. And his Roth IRA was the buyer on that and was the party on the contract getting the option. The Roth IRA gave the owner of the property 10 grand, and he had the right in 5 years to buy it for 400. Now, the owner of the property at the time was like, hey, it's only worth 200 now. You're going to pay me twice what it's worth. You're going to give me 10,000 to be able to do that within the next 5 years. Okay.
Yeah,
so we get the option.
Right?
Yeah. So, but our client, what he knew was at that same time when he was getting the option that the state and county were planning to put in a freeway exit and a little interchange right where this property was.
Nice.
And so this property was going to go from agricultural property to highway, freeway, commercial property. Well, that's what happens in the next 2 to 3 years. And the property goes from being worth a couple $100,000 to over $1.5 million bucks. And my client owned the right to buy it for 400 grand in his Roth IRA. Well, he sold that from his Roth IRA and got an over $1 million gain into his Roth IRA. Now, he did it with a Roth IRA, so he's paying no tax on it.
Nice.
And that's how I got into it. I was like, hold on. I didn't learn about this in law school. I took a lot of tax classes. And this client was frankly kind of pissed off, because he had never known you could do this. I mean, he loved that he stumbled upon this and figured it out. And it was to his own credit. I mean, he was determined to do it.
Right.
But he had top law firms, top CPA firms, financial advisors. This guy was very successful. None of them told him he could do this. And he was like, I make money doing real estate. I'm good at real estate. Why would they, all these professionals that work for me have not told me this, that I can own real estate with a retirement account in a tax advantaged way. And so that was when I got into it. And I'm like, you know what? There is a lack of professionals that know what the heck to do in this space. And I decided at that moment, I'm like, I'm going to become the expert in this. There wasn't really a good lawyer that was carving out a niche. There wasn't a good book on it. And so that was kind of my, as Oprah would say, my aha moment. And I was like, I'm going to be the guy in this space.
That's awesome. So people that transition from, that are using their retirement accounts, what do you find they're traditionally investing in that they want to go into real estate from? What are they moving out of typically?
Well, there's $28 trillion in retirement accounts in the US, and maybe some people listening have a sliver here and they are like, hey, I'm sick of the stock market. I don't even understand what mutual fund I own or what the fund itself owns,
Right.
And, but when people go to real estate and they move over to self-direct, and I would say even within self-directing, real estate is the number one asset class.
Mm-hmm.
It's just something people understand, right?
Yeah.
It's not complicated, but within real estate, I would say single family rentals are probably the most common. Straightforward, purchase price is usually reasonable, fits within what a lot of people have in their account. If tenants leave, they get occupied fast. It's not like a commercial property. You could have no tenant in it for 2 years because it's, it's got to suit the right tenant. So single family, I'd say, be the most common. I own single families with my retirement account rentals.
So you can't, once you see how well the strategy works, you have to take advantage of it yourself as well. And that's a good testament to the quality of the person, selling the product is using it themselves. That's always a good testimonial.
Yeah. I always tell clients, it's like, I'm not going to go to a restaurant that the chef doesn't eat the food he serves,
Exactly.
So it's a bad sign. And there's a lot in the financial services world, man, there's a lot of people that sell a lot of crap that don't buy it for themselves.
They wouldn't. Yeah, if you wouldn't use it yourself, it's not a good recommendation. And we do the same thing. When we wholesale properties, they're all properties that we got under contract that we planned on keeping ourselves, and then we'll let a few go here and there to pay for our marketing and things. So they're all ones that we would happily keep. So we're very happy to let other people purchase them and benefit from that as well. So tell me about the process of, let's say someone wants to move forward and they realize this is a great idea. Tell me about the time frame and kind of some of the overall steps that have to happen in order for you to transition into self-directed.
Yeah. So the first thing you have to do is you have to move to a self-directed IRA custodian. There's like 30 of them out there, but that's what our company does, Directed IRA at directedira.com. And because let's say you have an IRA or an old employer 401k at Fidelity, and you called up Fidelity and you're like, hey, I heard Mat Sorensen, I heard Josh Kopp, they said you can buy real estate with a self-directed, with an IRA. Fidelity's going to be like, no, you can't do that. And it's not because retirement accounts can't own that stuff. It's because retirement accounts at Fidelity can't own that stuff. It's because you're at the wrong place. So you need to move your account. So what you do is you just transfer the account. If let's say it's a traditional IRA at Fidelity, you would transfer that over to a self-directed traditional IRA, directed IRA, or whatever self-directed custodian you go to. And then that process, setting up a new account like with us, happens in a day. You can set it up online. You can e-sign in a day. But transferring the cash, you're usually going to, if you own mutual funds in your IRA or whatever you're transferring over, you would usually sell it down to cash, which can happen in a day or two. And then it transfers over funds from as cash to your self-directed IRA. That's probably the biggest lag. Some companies do that in 3 to 5 days. Some companies take 2 weeks. It just depends on where you're at.
Yeah, you're talking 2 to 3 weeks maximum to get things transitioned over. So really not a long time frame. And that's something that your company handles, all the ins and outs, and
we do it for
people
you.
through. Do it for you. Okay, that's great. So now let's talk about once you have that account created and maybe they talk to somebody like us, they've identified a property that they would like to purchase. Tell me a little bit about how that works. Because I don't really understand this. This is why obviously we involved you, Matt.
Yeah.
Tell us about how the retirement account actually takes ownership and identifies the property and purchases it.
Yeah. So the first thing to keep in mind is when you're doing this with your IRA, and let's say this is Mat Sorensen, me doing this with my IRA. Mat Sorensen is not buying the property.
Mm-hmm.
Matt Sorensen's IRA is.
Right.
So when I go to purchase the property, it's going to be Directed Trust Company, FBO, Mat Sorensen IRA. It's not going to be Mat Sorensen on the contract.
Right.
So everything's done in the IRA's name. The IRA would be paying the earnest money. The IRA pays at closing. The IRA receives the rental income. It pays expenses, and you may have a property manager in the middle kind of paying expenses, receiving income, sending it back to the IRA. But remember, it's not you, it's your IRA. And so that's the first principle, is just keep in mind, everything's got to be done in the IRA's name. And there's a couple different ways people buy real estate with an IRA. One would be just have the IRA own it directly, as I explained. The IRA is on title, the IRA gets the income, or it pays the expense, or maybe there's a property manager in the middle helping with that. But the IRA owns the property directly. The other way, though, is a lot of people will, rather than their IRA owning the property directly, they'll have their IRA own an LLC 100%, and the LLC owns the property.
Okay.
And the IRA is going to invest cash into this LLC. It's called an IRA LLC. It's got special provisions for IRAs and requirements, but it's going to have its own bank account. And let's say this is my IRA would own the LLC 100%. But I could also be the manager of the LLC, which means I can manage a bank account for the LLC. When the LLC goes and buys a property, I can put the LLC on the purchase contract and I get to sign the contract. I can cut checks. I receive income in the LLC bank account. And now the IRA owns the LLC 100%. Remember, I don't own the LLC, but I'm just the manager of the LLC. It's like being president of the corporation. I have authority to act or sign for it.
Gotcha. Okay.
So a lot of clients do the LLC because it puts them in more control. They're able to manage the bank account and sign stuff, and they don't have to go back and forth with their IRA custodian like us for every little thing they need to do.
Yeah, that sounds like and this type of account is going to appeal to people who are desiring a higher level of control. So I think that's a great way to set it up. And like you said, eliminates a lot of the back and forth and having to go get permission on things. So yeah, I think that's a great way for people to do it. Maybe talk a little bit about, I know that there's things you can, we're speaking about real estate as an item to purchase, but I know there's some prohibited items within self-directed accounts you're not allowed to buy, just in case people are considering other investments. I know there's a few things that are banned. Yeah.
So really, you'd be surprised. You can buy, we've had clients buy shares in racehorses, obviously a lot of small businesses and startup companies, private equity, venture capital funds. But the only things that have been restricted are collectible items. Those actually used to be allowed in retirement accounts, and people could buy, they used to be able to buy art and antique cars as investments, but those things got abused.
Right.
The antique car was out on the weekends. They were driving around using it. It wasn't really held for investment. People were buying wine collections with their retirement accounts that turned into bottle collections. And so Congress is like, you can't buy collectibles. The only two other things that are restricted after that is life insurance. You probably weren't interested in doing that with your IRA. And then the last thing is S corporation stock.
Okay.
IRAs just don't qualify as an S corp shareholder, but IRAs can own LLCs all day long. We do those quite a bit. Limited partnerships, obviously C corporations. So that's it. That's the only things you can't have in an IRA.
So if I find that baseball card collection on Craigslist, I can't go buy that in my retirement account, but
no, unfortunately,
it'll be just fine. Or a racehorse.
Yeah.
It's a pretty wide range of things, though. So, but obviously we're focused on real estate here. So let's talk about, let's say, once you buy a property or two inside your IRA. Now, it's important to understand you can't live off this income, right? It needs to go.
Yeah.
The profits generated from the rental income go back right into the retirement account. Is that correct?
Yeah, excellent point. So whatever you're buying has to be held for investment purposes, So if you're buying real estate, this isn't like your vacation home or your second home, right?
Yep.
This is property is held strictly for investment purposes. And you're also restricted from doing physical work on the property. I mean, you can visit the property, make sure everything's fine, check on things, show it to prospective tenants, whatever, that's fine. But you as the IRA owner or your spouse, parents, kids are all restricted in that you can't stay at the property, benefit from it, or provide physical work on it.
Just an investment.
Yeah, it just has to be kind of held at bay as an investment property. One other thing to note, there's something called prohibited transactions is what we're talking about here, is your account can't buy or sell real estate from you. So it's like, well, I own a rental property personally now, but I'd like to get the cash out and have my IRA buy it. No, you can't do that. You can't buy stuff from yourself or from your spouse or kids or parents. So it's got to be third-party stuff, held it separate. It's independent of you personally.
Okay. Yeah, that makes sense. That's good clarification, because I'm sure some wheels were turning, people thinking they could do that.
I know. A lot of people, I've been there, man. I know. I get the questions.
I think it's great that you're not allowed to work on the property yourself, because really as a investor that wants to scale up, but that's something you should not be doing anyways. So hopefully people that are listening, they're hiring professionals to do the things, and they're spending their time, pursuing the next deal, which is the highest use of your time, instead of going there and painting and rehab yourself. So I think that's a good thing to prohibit.
Right. It's a good discipline to have.
Yeah, exactly.
Don't get caught up. I know, a lot of people like that. They can enjoy that, but I mean, I don't see much value to it. The only time I see value to it is if you own rental properties and you're trying to teach your kids how to work or something, and you make them go mow the lawn and fix stuff,
Exactly. Yeah.
That's what I've done in the years for stuff I personally own. But past that, heck no, hire a property manager. It's not worth your time.
Yeah. You want to scale up and spend your time doing the highest dollar activities, which are typically finding the next deal.
Yep.
Awesome. So would you say, you spoke about racehorses, things like that, buying shares in corporations. Would you say the vast majority of people are purchasing investment real estate, as we described, kind of single families or small multifamilies? Is that the bulk of what people utilize these accounts for?
Yeah, that's what's most popular. I mean, really what I think that's just one of the most safest investments out there,
Yeah.
Unlike the stock market, which are a tech stock that could bottom to zero, real estate never flatlines. It doesn't go to zero. There's always a intrinsic value in it. And that's why a lot of people love it and the stability of it. So it's just popular, it just is.
And also, it's one of the ways that you can surpass the returns that people are typically getting inside your IRA currently. So it's one of the ways you can go past that. And
you can understand it. It's funny. I have so many clients like engineers and pilots and people that are very detail oriented that hate owning stocks and mutual funds. They can't understand it. I mean, I have clients that they're the ones that read the mutual fund prospectus and they're like, I don't understand the thing. These are very intelligent people. And I had a client who was a pilot tell me, he's like, before I fly a plane, I know everything about that plane. I have read everything in the manual. I know everything about that plane before I'm going to sit in the cockpit. He's like, I feel like in my retirement account, I'm just guessing. I read everything about this stock. I read everything in their prospectus. I read everything that's been reported on it. I can't make sense of it. But with real estate, he's like, I can get it. I can analyze it. I can see it. It's, you know what I mean? So you can figure it out. And there's a lot of just peace of mind in knowing that.
It's a tangible asset, and it's something you can exert control over. You have a property manager, you're talking to them directly, you're controlling how it's rehabbed. Now, okay, we're talking about rental real estate. Now, let's say you're a flipper and you want to hire somebody, fix up the house, sell it for a profit, and just put the money right back into the account. Is that something that can be done too if a flipper wants to utilize this strategy?
Yep. We have tons of clients that do that. So IRA can own a property. You hire contractors to fix it up, sells it, flips it. Many of them use an IRA LLC because there's a lot of contractors getting paid and stuff. So it's nice to have that flexibility.
Minimize that headache.
Yeah. The one thing you got to be careful about when you're flipping, though, is IRAs are designed to receive investment income. So capital gain income or rental income, interest income, that's all cool if you get that type of income in an IRA. You don't pay tax on it. You get the great retirement account perks, right? But if an IRA gets business income, there's a tax called UBIT, unrelated business income tax, that applies. And so in the context of flipping, if you're flipping a bunch of properties per year, the IRS starts looking at your IRA like it's in the business of real estate as opposed to investing. And if it's in the business of real estate, it has to pay this unrelated business income tax, UBIT, which is like a 34% tax rate. It's a high level tax.
Right.
So
what level would trigger that, you think?
So our rule of thumb is if you're flipping 2 or 3 properties a year in the IRA, don't stress. And frankly, most clients are only going to do that many,
Yeah, right. That's
really,
a lot to manage anyways.
Unless you got a lot of money and stuff going on, you're really not going to flip more than a couple a year anyways. So, but if you're flipping like a property a month, that's too many. The IRS is going to see you in the business of it. But if you're flipping, 2 or 3 a year, you're really falling outside of that. You're not going to be in the business of it at that level.
Okay. Well, that's good to know. And like you said, the vast majority of flippers that we know, at least that are doing this inside retirement accounts, that are probably going to be well below that threshold. So that's some good peace of mind there.
Yeah.
Awesome. All right. Well, we're going to wrap things up here, Matt. But if people wanted to reach out and move forward and set up these type of accounts, what's the best way to reach out to you?
So go to directedira.com. That's where you can set up accounts. We have e-sign applications you can set up. I also, at directedira.com, I have a top 10 frequently asked questions. That each one of those has a short description and summary of what you need to know, plus links to a longer blog article of mine that explains that particular topic in detail. And then my book, of course, which is the Self-Directed IRA Handbook. It's sold 20,000 copies. It's the #1 book in the self-directed IRA space, Amazon bestseller. You can find it on Amazon, the Self-Directed IRA Handbook, or on my personal website, sdirahandbook.com.
Awesome. Well, Matt, I really appreciate your time today, and we look forward to doing business with you in the future.
Okay. Thanks, Josh. Appreciate it.
You bet. All right, that was our interview with Mat Sorensen from Directed IRA and Directed Trust. Make sure you check them out. We got have the link in the show notes, but check him out at directedira.com. Check out his book, The Self-Directed IRA Handbook. And we'll be giving one of those away, too. Shoot us an email, info@reiRookies.com. First person that requests the book is going to get a copy. Make sure you include your address. All right, everyone. We put a lot of effort into providing useful content. If you found value in the show, we'd love it if you head over to patreon.com/REIRookies. Shoot us an email at info@REIRookies.com if you have any suggestions for topics or any questions for us. Also find us on Facebook, Instagram, and Twitter at REIRookies. And if you like what you're hearing, head over to iTunes, subscribe, rate, and review the podcast. It really helps other rookie investors out there find the show. And remember, get off the bench and get into the game. We'll see you next time. This episode is brought to you by FargoTurnkey.com. Do you live in a good cash flowing market? If so, Turnkey isn't the best choice for you. You should buy in your market. If you don't live in a great market for investors, where can you find profitable cash flowing properties? We love the Midwest, where prices are reasonable and the people are great. Ever heard of North Dakota Nice or see the movie Fargo? That's where we live. We personally invest here and have lived here all of our lives. How does Turnkey work? We find the property, we rehab the property, we find you a tenant and place you under the care of our local property manager, who we trust with all our own investment properties. I'm sure you have questions about how the process works and what to do next. If that's the case, fill out the form on FargoTurnkey.com and we'll reach out to see if you are a good fit for our business. We have a limited supply of properties every month, so we can sell only to a few qualified buyers. See you at FargoTurnkey.com.
I don't like to tell a man what to do with his money, but if you ain't investing in property, then you're dumber than a dummy.
I'm not dumb. I'm smart.
Well, buy property. That's my advice.